Good afternoon, and thank you for joining us today. My name is David Talbot, Managing Director and Head of Research here at Red Cloud Securities. I'm delighted to host a Red Cloud webinar on uranium today, and we're going to hear from UEX management, including Roger Lemaitre. He's President and CEO of the company. During today's webinar, he will provide an overview and outlook, and then we will take some questions. Please type your questions into the chat box at any time, and we'll get to as many as we can. But before we kick things off, first we need to discuss the fine print. During today's UX webinar, forward-looking statements may be made, and I would direct listeners or watchers to the forward-looking statements outlined on page 2 of UX corporate presentation. That can be found on its website, uexcorp.com. For Red Cloud Securities, I'd highlight this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. And please see our most recent research located on the Red Cloud website for specific disclosures on UX. Now, before Roger steps up, I'd like to say a couple words. Very positive news for the uranium sector was announced last week when Sprott Physical Uranium Trust increased its base shelf prospectus to $3.5 billion. So what does that mean? That means that after raising $1.3 billion already this year, it now has permission to raise nearly triple that amount. So expect Sprott to continue to add to its 40 million pounds or $1.8 billion worth of uranium. And we view potential for Sprott to raise funds as particularly good news. Yes, we still await for an increase in long-term contracting to support uranium prices on a more sustainable basis. We would love to see the demand being driven from end user buying, essentially the nuclear utilities that use 177 million pounds of uranium per year, but have not made purchases or signed contracts of this magnitude in recent years. Perhaps recent Chinese buying of uranium from Kazatomprom may be sign of things to come. However, ongoing purchases by Sprott would be expected and should be expected should further funds be raised. Investors should also rest assured that Sprott will not be purchased uranium would not be at risk of coming back into the market anytime soon, given the nature of the trust. Now, one cannot ignore the impact this physical buying has had on uranium prices in 2021. The initial $300 million equity helped drive prices from $30 to $40 in just 1 month, starting in mid-August. And this was followed by that $1 billion raise. And spot prices increased to $46, $47. So once Sprott decides to use the next $2.2 billion to buy physical, that might help propel prices above $50 a pound, and perhaps close to those incentive prices needed by a lot of the uranium investors to get their projects growing. So, this is great news, but we don't believe that this phase of buying has really started yet. Uranium prices have faded to the 45, 25 per pound range, and the stocks have moved off their highs recently. So that said, I'm going to turn it over to Roger to update the audience on the company. So Roger, why don't you take it away?
Oh, thank you very much, and thank you, Dave, for that introduction, and saving me a little bit of time when it comes to how we view the markets going, because I think you have, in David here, you have one of the very best in the business who's seen it many times over. So I won't dwell too much on that. Thank you for taking the time, either here live or if you're going to watch us on the repeat, for your interest in UEX. We're a unique investment in the uranium space, particularly in the Athabasca Basin. You see a lot of companies out there that are looking at some grassroots opportunities. You got companies that have got new projects that are moving towards development. UEX is more of a portfolio unto itself, and with our recent acquisition of JCU, we're accelerating our plan to become a long-term sustainable uranium producer. And I think that's what you're going to see. It's a little bit different because we don't have a single shiny project object that we go, that's where the value of the company is. It's in the value of the portfolio itself. As Dave mentioned in his introduction, we do have some forward-looking statements here, and we're going to be relying on those. Please take the time to look at this a little more carefully in the future. Like I said, we're a one-of-a-kind uranium junior in the space, particularly in the Athabasca, where we're dominantly focused. 6 key things I hope you take away from this presentation. One, we're poised to become a low-cost, multiple source, not just a single source, uranium producer. We have a ton of resources, way more than most companies. Because of the portfolio, we have a long-term sustainability. So it's not just one opportunity. We have several going forward. Our growth side potential, I think uranium investors, whether you like the market one way, the high end, the low end, or somewhere in the middle, on the way up or the way down, values greatest generation in the uranium space has always been and always will be making new discoveries, and our portfolio is uniquely positioned to have lower risk growth upside. We're compelling value compared to our peers, and for what this company is doing right now and where we're at, the team and leadership group is exactly poised to help you do that with experience to do it as well. We're, like I said, unique uranium investment. You have 5 development-ready projects, 3 resource-level projects. And these are projects that have resources on them that are not completely defined or on trends that need more work. You have mid-stage projects where we have hot holes or smoke that tells us we should be somewhere. And on those mid-stage projects, we have multiple targets. Hidden Bay, particularly alone, is one of those 4 mid-stage projects that has 14 of these. And we have a large portfolio of grassroots projects. So, we look more like a mid-stage copper company than that's not yet into production than, say, your typical Athabasca uranium junior. And we're blessed with a lot of resources, as you can see, one of the largest resource holders out there. Our pipeline looks like this, and I mentioned before, there's a lot of peers in our space that are smaller than us. They have a lot of interesting grassroots projects, and they're hoping to make the next Grand Slam home run by making that discovery in the Athabasca Basin. And we have on the other side of the development spectrum, we have our projects like Wheeler River, Millennium, Arrow, et cetera, that are ready and poised and working towards development. And investors in UEX have exposure to the next wave of uranium development projects through Wheeler River, Millennium, and Kigabik. You also have a large portfolio of grassroots projects. But I mentioned before that mid-stage resource level projects where we have multiple projects. These are lower risk exploration potential projects. Christie Lake, for example, we're on a mineralized trend that is underexplored. At Horseshoe Raven, they're ready to move forward towards that development. At Hidden Bay, we have smoke that, it's not about, hey, is this a productive area to be working? It's, hey, here's a productive area that needs more work. And I think that creates lower risk exploration pipeline potential. A little bit about the company. Going into today, we're a market cap of $185 million. We've been volatile like all the stocks in the space. Dave said that we mentioned that most of the uranium equities come off our high of a couple of months ago. You can see that's the case. We're well blessed with over $5 million in the bank, in our own bank account, through our 50% owned subsidiary, JCU. They also have a similar amount of money in the bank account. So we're well positioned to take advantage of an increased exploration upside work programs here in the next year. And we have the key players that are in the uranium space and funds are major shareholders in our company. I think a lot of people don't realize when we say we're a resourceful company, this is a chart here of your global uranium explorers and developers and their total pounds in the ground. UEX is number 5 in the world, 3rd largest in the Athabasca Basin. We hold more resources in the ground than most of the ISR producers and developers. So it's not insignificant. But we also bring exposure to major mine developers through major and junior players. Yet compared to our peers, whether it's in the U.S. producer average, our peers in the Athabasca Basin, or globally as a developer, there's still a lot of value that can be extracted here on a market cap per pound basis. A little bit about uranium going forward. I think the last 18 months have seen a significant shift in the uranium perception in the power of nuclear power. We're seeing it through the climate change initiative and the growing recognition that nuclear needs to be a key component of that going forward. We're still seeing, reactor construction numbers that are really high with the 441 operable reactors and a little over 410 actually operating today. We're seeing substantial growth with these 56 reactors under construction. Meanwhile, we're seeing uranium demand far in excess of primary supply, but probably more importantly, it's that cost-effective supply. So looking at the uranium price of under $35 a pound, if you take today's price and say there's got to be some value in there for capital cost recovery and investors, only half of primary demand is being met by costs under $35 US a pound in 2019, and this year we're estimating that to be only 83 million pounds. There's a lot of room for growth. Meanwhile, when you look at all the consensus out there, various analysts and industry groups, we're seeing a supply gap that was expected to occur in 2027 move forward with the COVID issues, and then probably even more exacerbated by the Sprott Uranium Fund, which has created a lot of fun in the space for investors, but also a lot of angst. And what I mean by that is, I think for us in the uranium sector, we've been very used to flat challenges with uranium price. We've seen quick spikes or sharp spikes in uranium price, but what we haven't seen is a whole lot of volatility in the price. We've seen volatility on the downside when there's a little bad news in the nuclear space, things drop, or someone puts out an inventory analysis in the past. There'll be a temporary drop in a sort of sawtooth pattern, dropping uranium price and seeing it come back to its place. With Sprott in the market, buying uranium and taking away and changing the indicators of price at things like UEX Weekly, we're seeing upside volatility as well in the space. So it's a little bit of a wild ride for investors for sure. But I think you're going to see as Sprott sporadically comes into the market when the conditions are right and they're able to use their ATM facility, we're going to see ups and downs along the trends. And I think all the consensus is that with the supply gap looming, with Sprott tying up a significant amount of annual supply in the foreseeable future, that we are on the beginnings of that uptrend. A little bit about why that's important from a UEX shareholder point of view. We own a big piece of the next generation of the next uranium mines in Canada. We own a stake in 3 of the next 6 tier 1 deposits with Phoenix and Millennium, Phoenix being the ISR project that's operated by Denison. We own an indirect 5% stake in that through our ownership in JCU. We also own an indirect 15% ownership in Millennium, which will be Cameco's very next development project after Cigar Lake comes close to its conclusion. We also have projects that look out in the next probably wave or next tier, Kigavik, Shea Creek, and Horseshoe Raven, that put us in a really good position of having a big stake in the next generation of uranium developments. But the beautiful advantage for us, other than Horseshoe Raven, we're not the operator. And so while you go, wow, I'd like to be the operator, what it does allow us to do is let those operating companies put the majority of their resources into development and allow us to focus on growth. And I think that's the strategic advantage that UEX has over its peers. Why is that important? Because growth is what drives the share value for investors, regardless of where we are in the uranium cycle. We have 5 development-ready projects, 4 of them in the Athabasca Basin that we own a piece of. We own 100% of the Horseshoe Raven project. Smaller in terms of pounds, pound for pound, we believe it's as valuable as almost anything in the Athabasca Basin. If it was placed anywhere else in the world, this probably would already be mined out. But because we're used to really high-grade Athabasca deposits, people kind of go, yeah. But it's a very valuable project. We own 10% through JCU's 10% ownership in Wheeler River. We have a piece of that project, which a lot of people are very familiar with. I just talked about Millennium. Probably one of the most important projects in our portfolio is Shea Creek, where we own just under half, and our partner is Urano. It's the first of the southwest side of the Athabasca Basin discoveries, just south of the Cluff Lake mine. We think it's not only is it an interesting project with almost 100 million pounds of resources, but we think the growth potential there is probably as good as any other project in the Athabasca Basin. And we have Kigavik, which is our partner, also with Urano, up in the territories through our ownership in JCU. This project has been through the project description pipeline, and it's been put on hold temporarily because of unable to get the license because our partner didn't want to put a start date on the mining license. But only half of the known deposits are actually in the resource there. Just summarizing a little bit about Wheeler, Millennium, and Kigavik, 2 known deposits with exploration upside at Wheeler River. Currently, a feasibility study was approved by the joint venture here back in September. Denison is definitely pioneering the ISR method into the Athabasca Basin, taking proven technology elsewhere and adapting it for the Athabasca Basin. And we're pretty excited about where that's going. And the 2018 PFS said there was a really good economics on the Phoenix deposit recovery. Millennium's a basement-hosted deposit, more amenable to conventional underground mining techniques. It's been through the process, or started the process through for permitting, which Cameco withdrew in 2015 due to the low prices. We believe that this is Cameco's next global development project. And I just mentioned a little bit about Kikavik. Mining license wasn't granted in 2015, but not for technical, environmental, or social reasons, but primarily because they needed to put a start date on the project. And in 2015, uranium prices being low, there was not a lot of incentive to start mining. We think that could be picked up relatively quickly when the price demands more uranium, or when the price incentivizes more uranium production, excuse me. Shea Creek and Horseshoe Raven, those are projects that I think will, the market signals that need for uranium for the next generation of projects. These will be really valuable. 4 known deposits at over 3 kilometer strike length. Probably the key point here is that 50% of the resources are in the basement, whereas the vast majority of work done at Shea Creek has been focused on Cigar Lake style and conformity deposits, not the Eagle Point, Millennium, Arrow style of basement deposits. And we've identified 10 areas that are in dire need of drill work there. We think it's probably the #1 brownfields exploration project in the basin. And Horseshoe Raven, relatively low grade to the Athabasca standards, but that means we don't have to actually do the high-end radioactive protection measures, nor do we have water issues because we're off the edge of the basin here, and we have to move nuisance infrastructure out of the way to be able to mine this eventually. The road literally goes over the deposit, and so does the power line. So very valuable projects going forward. Our resource level projects, we talked a little bit about Shea Creek. We believe there are 10 areas at Shea Creek that are in dire need of drilling to look for the Canna-style deposit in the basement. Weir River, all the feasibility studies underway. There's been some interesting discoveries on the K West zone here last year. Our Christie Lake project, we've only done basically 1.5 years of our 5-year plan there, even though we've been there doing work for much longer. We got distracted by the fact that unconformity potential still existed there that we didn't think did. And we're now going to be focusing on working into the basement, which was our year 2 plan originally. We dabble in the cobalt nickel space as well, with the first of kind type of deposits of what we call the Athabasca nickel cobalt deposits. Never been found before. We think there's many of these in the basin, and we've been talking about trying to monetize this asset for a few years. The price of cobalt has come around to the point where we think we can actually do that in the near term future. So resource projects, Christie Lake, I think the picture says it all. 3 deposits and counting. McArthur River's in the distance there. The trend has only been explored along the unconformity, along where the 3 mineral deposits are. The trends going back towards McArthur River are essentially unexplored, and the base potential below the deposits is unexplored. We'll be focusing on that in the next year and 2. West Bear, just mentioned before, shallow and pitable. 2 deposits now, discoveries at West Bear for these cobalt, nickel, uranium-free deposits that we're pioneering the new generation of discoveries. And we think those are going to be valuable as the EV market continues to take off. Our mid-stage projects, these mid-stage projects are projects that have hot holes, smoke at the unconformity that have never been followed up on. And I put Hidden Bay as probably the #1 basement potential terrain in the entire Athabasca Basin. The reason why, it's got great infrastructure. It balanced 2 world-class milling operations, mining operations, and the sandstone cover is thin, 0 to 200 meters, but generally less than 50. And what that does is give us the ability to look for basement deposits like Millennium, but right near the surface, so still very shallow depth. And then a huge portfolio of grassroots projects and that we own various interests. Most of these are partner operated through Orano, Cameco, and Denison. So they're in the prime locations in the Athabasca Basin, right where you'd want to be if you were dying to pick up some land. And we've been talking about the market conditions being such that we can monetize some of these assets, and we are currently actively doing that as we speak. So our focus short term here is to help and participate in the development of the Wheeler River project, grow the resources in the company through those mid-stage and development-ready projects, get Shea Creek going through that brownfields exploration program, and that's a little bit of arm twisting with our friends at Orano to make that happen. Extract value for the nickel cobalt assets. We've seen the cobalt prices come back to where they were in 2017 here just very recently, and we're starting to see more interest in the cobalt space from an investor point of view, and find viable ways to monetize value on our grassroots projects. Long term, we'll be there for Millennium and Kigavik and continue to look at opportunities in both uranium and cobalt space. Our team, from an expert point of view, Graham's been with us since day one. He's the chair of the board of directors. A lot of experience in junior mining sectors for groups like Silvercrest and others. Suraj Ahuja, anyone who's been in the Athabasca on a technical front has met or worked with Suraj. He's an incredible resource for us. Catherine Stretch and Peter Detepsky are newer additions to the board here a couple of years ago, bring a lot of investment banking and corporate development experience. And Emmett McGrath, a phenomenal accountant here with good corporate governance and audit experience. Chris Hamill, our exploration vice president, 14 years at Cameco, very, I think his skill set, as is the rest of the team and mine as well, is all about looking for these basement hosted deposits, which is our strength in our portfolio. And Evelyn Abbott, who's been through the trenches when it comes to work in the junior sector in various companies. This is the team you want to look for growth opportunities. This is the team that you'd want to have on your table. But I'm even more proud of our technical team. 7 uranium deposit discoveries under our belt, both here at UEX and in our previous lives. The cobalt nickel discoveries, which nobody else has found. We don't just find things; we find things that have been put into mines that have been. And one of them has been mined already. Not a lot of years experience, but a lot of very successful experience. And this is the team you want to have, looking for those, exploring those mid-stage resource level projects. So once again, just circling back, low-cost multi-source uranium potential, lots of resources. Because of the portfolio opportunity, we're sustainable. We can flex our strategy to meet the adapting environment. So we can be a little more focused on grassroots work. We can be a little more focused on mid-stage work, and maybe developing ready when the time is right. We have that I think, unequaled growth upside potential. Our valuation's challenged, so there's room there to be had, and the team is the right team to make these things happen. For us, coming milestones, our Christie Lake drilling program from the fall, we're just waiting on the final results from the lab. It's been a bit of a challenge from a QA/QC point of view, but we're close to having that done. Our plan is to increase our exploration tempo in 2022 by doing more work. I would argue last year was probably the quietest year across the board in the Athabasca Basin for the last 20 years. And I think it's kind of strange to think about that, considering how the market's moved since then. But we're expecting to be doing more work next year and positioning ourselves to do that. Also want to do our cobalt positioning, monetizing the value. We're exploring partnerships now that there's funding for grassroots exploration in the Athabasca Basin. There hasn't really been that way for most of the last decade. We're looking to monetize other valued portions of the portfolio, and we'll continue to work with Denison, supporting them on their feasibility study at Wheeler River. And with that, I'll turn it back to you, Dave, to throw out any questions. I see there's a few on the side here.
Yeah, we got a lot of questions there, Roger, already. So thank you very much. Great presentation. So we are going to kick off the Q&A here. A reminder to everybody, you can put your questions into the chat box and we'll get to as many as we can. We do have lots of time. So Roger, how do you see UX from a peer group perspective? The company, you mentioned you have one of the largest resources in the basin. You have projects at literally every stage other than production. Are you an explorer, developer, both? How do you fit in? Who are your peers?
I think that we're kind of in the middle ground between your typical producer or developer that you see, so your Denisons, Fissions, and NextGens, and your grassroots companies. Where we fit in the middle is, okay, you want exposure to development, we give you a piece of that. You want exposure to the uranium price through resources, we give you a piece of that. But I think the bulk of our value or potential value in the future will come from new discoveries. And it's having the best exploration portfolio that even the bigger companies in our space don't have that makes us more valuable.
Okay. And yet you don't necessarily get the recognition for your resources in the valuation. Maybe to add value, are there any thoughts to do spin outs, perhaps the 14 grassroots projects into a pure exploration company, maybe bring in some partners to share work commitments on your 100% owned projects?
I think, yes, Dave, there absolutely is discussions going on about things just like that. We've been very patient, and I know it's tax shareholder patience as well. To do this even a year ago would have been really difficult to do. One of the advantages is, and also one of the curses at the same time, about being a company that's now turned 20 and was around before the last run in the uranium space, is that we got to hand pick some really good chunks of land and put them into our portfolio. And they're the kind of thing, once you give away, you can't get back. So you got to get value for them. And value isn't just doing a deal for the sake of a deal. It's doing a deal where when you vend it out, the purchaser or the acquirer or the partner has the ability to answer questions by doing work on the ground. And I don't believe, and I'll throw the question right back to you, Dave, when's the last time until very recently that investors were valuing grassroots exploration work, even in the Athabasca Basin? I mean, always value discovery, but until you make that discovery, it was pretty lean. And we didn't want to strand these what we think are really valuable assets, because they're literally, I mean, who else has a chunk of land that borders 2 world-class mining operations and has a pit 50 meters from their property boundary? I mean, you just don't give those away just to make a deal. They're more valuable than what you're seeing in the space. We're seeing lots of activity in the space right now, a lot of new entrants coming in. And I think that's been, we're definitely getting a lot of inbound inquiries and doing a lot of discussions about stuff like that. But once again, it's about finding the right partner.
Yeah, absolutely. I think it's at least been over a decade since the last time any grassroots projects have really got value for being just grassroots projects. So pre Fukushima. So yeah, I'm just wondering how the weather is in the Athabasca so far this year. Are we expecting another short winter field season? Last year, I think a lot of drillers only got in about half of what they were looking to accomplish. Is there anything you're doing right now to hopefully avoid short seasons?
Well, I can't speak for our partners. I know that the plans that we have not yet announced, we'll be doing shortly, are very focused in areas that, honestly, the conditions of the winter will not have an impact on us significantly at all. Last year's short winter was painful, but it was also exacerbated by a permitting challenge through the Ministry of Environment in the province of Saskatchewan. Then they kind of dropped the ball on permitting last year, and it put us all in a 4-week delay. So short winter plus that on top of it made it really difficult, and that impacted us right through. Summer programs this year were impacted badly by gold across Canada, and just trying to get a drill rig was a bit of a challenge. So we've done our best to tie them up. We have our permits in hand for the work we plan to do this year. And we have our contractors sort of already lined up. So I can't speak for others, but I know for UEX, we expect to be able to go full speed right off the bat.
Okay. What's your view on the current First Nations, or I guess more specifically the CRDN issue in the Athabasca Basin? And I guess how does UEX address your social license?
Well, I'm going to address that 2 different ways. Okay. So the first way is not about trying to duck that question, because it's hard to opt. Our west side projects in the Athabasca Basin, 100% of our properties are teamed up with Uranium. And Uranium has a long-standing relationship with them. So I know when CRDN looked out and said who's got interest there, we have recorded interest on the titles there. But as the operator, Uranium leads our discussions there, and they have had a long-standing relationship with CRDN. So while you go, ooh, ouch, it hurts. There's very little for UEX to do directly. Our projects that we operate 100% generally are in the Eastern Athabasca Basin. And I think people have looked out on our website. We have had our first ESG report last year. We surprised ourselves when we did the report saying, what are the things that we do with the communities? And we went, oh, wow, we do this, we do that. We never really documented it, but it's only a baseline for where we're going. So some of the things that we've been doing last year, for example, on a business and opportunities point of view, we gave Athabasca Catering their very first ever, to went on a little bit of a limb to give them a new business for camp exploration catering they had never done before. We've done similar. Of course, we have our hiring of local groups when they're best we can to help us in our projects. We're fostering business opportunities with them and trying to help them out to get there. We see there's a change happening in the Eastern Athabasca Basin as the stakeholders have gotten together and get an umbrella group to help with the permitting process. And that's got its growing pains, but so far things are going really well, I think, on both sides there. And we're doing a lot more, just recently, for example, with the Métis community in Pinehouse, they had a bit of a challenge and they needed a hand. And we reached out and they said, this is what we want. And we said, well, that's not enough. We'll do a little bit more. And so our approach is we're trying to be really good neighbors and give them opportunities to help us as much as possible. We believe fundamentally that the groups that have to benefit the most when it comes to the uranium mine are the people whose backyard we're working in. So we're still pretty small. We're not a mine yet, so we can't quite we don't have a lot of things we can do. And it's not, tens of millions of dollars worth of jobs and opportunities every year. But what we can do, we are doing, and we're growing our relationship with the stakeholders.
Right.
And it's kind of wishy-washy, but it is about building trust and relationships and doing things without being asked.
Right. Okay. Yeah, we have quite a few project-specific questions, so why don't we get to that before we come back to some more corporate? But looking at Michael Lake, when do you think you're going to return to drill that and expand and hopefully define that new discovery?
Oh man, this is a sore point for us, and it's nothing to do with our team. And I can make my geologist cry. I told him that this year, while we would love to do more work at Michael Lake, and we think it's one of the premier opportunities in the basin, with the acquisition of JCU, we're really, and with the investor interest in uranium, we really do believe that we need to focus on uranium this year. It's, we also are still looking at getting that opportunity floated out for the cobalt space. So we're going to leave that on the table for the winter, I think, this year. But my poor geologist is in tears.
Yeah, all we want to do is grow. Okay. Wes Bear, can you maybe outline the steps required for the cobalt discovery spin-out? And maybe, I'm assuming the term near term is going to come up, so maybe define near term if you can. So
near term, was we wanted to do it before the end of this year, but unfortunately, it's not so much people, it's not so much operating team, because I think that part's covered in UX. I think given our unique knowledge about these things that we're finding, that there still needs to be a technical tie to UX somehow. It's about finding someone who wants to fund it. So if anyone out there can bring us someone who wants to fund the next 3 or 4 years worth of work there, we're happy to partner with you to make it happen. The investment space have been so focused a year ago on gold, and now so much more on uranium, saying, hey guys, we got a cobalt asset we're interested in doing, bring us some cash and we'll do something. It's amazing that you're getting a lot of quietness right now, and that you would think that's almost impossible to believe. But we're also once again, same thing with the uranium opportunities that we have. It's about the right space and the right time. And Dave, I know that you've got a very long history as well in the EV metal space. And 2017 was a great year, and 2018 for the first half was a great year in that space. And then in the second half of 2018, when the price dropped and there were some issues in equity, the cobalt equities financing in Toronto, it became really difficult. I put a lot of credit on our team to go from, hey guys, surprise, mid-November, we're going to be doing cobalt, to this June getting out a discovery and a 43101 resource, only to miss the market by a mere week or two. But when you look at the interim time since then, we've seen 20% of the world's supply on a single mine go idle. A second one stockpiling because they had a uranium issue, and it was very difficult to create value. I think we would argue, and David, we would argue in 2017, 2018, there was tens of millions of dollars worth of value in UX from our cobalt assets, and turn around and sell it at the bottom of the market for a fraction of that, and not retain value for UX shareholders. This is a very difficult proposition. So what we had offers and we had opportunities, and we talked to everybody. I mean, everyone goes, well, why don't you talk to these guys? We've been talking to them. I get it. But to sit there and say, float a company worth $5 million and UX shareholders own a third of that, and you have to still fund it, is really difficult as a value proposition. And we're better to hold it till the markets return. Prices of cobalt today in the last month have come back to where they were, that fueled the speculation back in 2017. So investor interest, I think, is starting to pop up again because there is nobody in the space anymore.
Right.
On the flavor of the month cobalt companies back in 2018.
Yeah. Okay. Yeah. You mentioned, selling off at the bottom of the market. Now, I don't think we're at the bottom of the market in the uranium space, but I certainly don't think we're anywhere near the top. But, is there any dialogue with Denison to sell them the last 5% of the Wheeler River project? Is that something you might consider? If it's the last piece of their puzzle, maybe they provide a bit of a premium.
Those are kind of things I couldn't talk about one way or the other, David. As much as I like to. Would we be amenable to it? Yeah, possibly. It's a little more complicated than that because of the ownership structure of that.
Mhm.
But it is possible, and there is still a little governance issue back in Japan that would have to be dealt with, but it's all doable.
Okay.
I think it's more a question of we taking a deep breath after making the acquisition together and
Yep.
planning for next year, and we'll see where.
Okay. And then sticking with Wheeler River development, is there a role for you guys to play in the project development? Anything that you can contribute, or is really UX along for the ride as Denison moves that forward?
I think as a 5% owner, and while you sit there and say, "Oh, we'd like to muscle in there and do something," we're pretty much going to be along for the ride for the most part. I think we can provide some technical feedback on what we're doing, but realistically, as a 5% owner, you can try all you want. At the end of the day, the 95% owner is going to have their way anyway. That being said, we've been obviously getting a peek under the curtain what's happening there, and I think I'm way more optimistic about what they're doing than I was even. I mean, obviously, we were interested because we bought JCU and like to have exposure to that, but I think they're doing all the right things, and I don't know there's a whole lot of technical stuff we're going to be able to add to that. They got the right people doing the right things, and I'm really happy with what they're doing.
Right. Okay. Can you give us an update on Christie Lake drilling?
Okay, so a lot of people have been saying, "Hey, let's see the results from the fall." Yeah, we're feeling the same way. We've had to take material back to the lab a couple of times. Their QAQ because they didn't meet our QAQC standards. That's a complicated process, so it's delayed results. We do anticipate having them out in the next couple of weeks, and the plan for what we're going to be doing next year at Christie Lake as well.
Right. Okay. What are your next steps to regularly give updates to nervous retail shareholders that need hand-holding? Somebody else pointed out we haven't heard much news since August, but internal promotions and share grants. Could you maybe give us an idea of what kind of news to expect? What are the near-term catalysts for UX?
Oh, for sure, and I can understand shareholder frustration. Last year, we did a fraction of what we did in the previous couple of years. So automatic news flow from field was a lot lower than it had been in the previous years. Like I said, last year was probably the lowest year in 20 years in the Athabasca Basin, and we still did a $2.5 million program. We lost probably, I'd say, 2.5 months of the field season over the year due to things that were beyond our control. But this year's programs, operational tempo is up. We're going to see multiple programs on the go coming up this year at Hidden Bay, at Christie Lake, summer, winter, plus the cobalt angle, the uranium opportunity monetization, and with Wheeler River. So I think for us, news flow in 2022 is going to be much more, an order of magnitude probably higher than it has been over the last year.
Mm-hmm. Okay. And to help restore investor confidence, would you consider insider share purchases?
Oh, absolutely. The board of directors has recently put together back in the late summer here a program for board members and management to own 3 times their salary in stock over a given period, a 3 to 5 year window. So we're all in that. With the exception of our chair of the board, who owns a substantial amount, all of us are going to be in a mandatory buying period.
Mm-hmm. Okay, great. Finally, we'll get to a couple final questions here regarding some of your longer-term projects. Looking at Shea Creek, how likely is it that Orano puts some further funds into exploration there? Exploration is a little bit costly. It's because it takes a while. Where does that project really rank in their pipeline?
There's a good question. When you look at the Urano pipeline, and I think I have to go back to the Urano pipeline, and they'll probably get mad when they see this. UX owns directly and indirectly a piece of 2/5 of their pipeline. And you look out at Cigar Lake, and there's a big decision looming here in the couple of years down the road about Cigar Phase 2 and whether it goes ahead. And that will give them a couple more years before they're sort of up against a wall with McLean Lake Mill. But when you look at them globally, they have a great opportunity in Mongolia. They can't really do a whole lot more in Kazakhstan in terms of output because they're kind of at the max. They have Kigavik, they have Midwest, which is next door, but relatively small to their mill at McLean Lake. And they have Imaran in Niger, which is a big, but probably requires a substantial price increase to go forward. They have Kigavik and they have Shea Creek, which are the only two that have significant upside potential. So I don't know where they rank it. They hold things really close to their chest. We've certainly been all over them in the last year going, hey guys, here's an idea, here's an opportunity. I do think they believe in our technical review that we've done that shows those 10 really high priority targets that look like Canada-style deposits. The question is, what do they want to do? And I can't answer that question. I wish I could. But we are pressuring them in multiple ways. Put money in the ground, give us control. And we have been actively speaking to them about those things. But they work in their own time, unfortunately.
Yeah. Okay. And then sort of a related question, what sort of uranium price might it take for them to reapply for permits at Kigavik?
Oh, I think when you look at Kigavik, it's right around, when you look at the public documents that are out there, you're probably looking in the $55 to $60 range, I think, is a safe bet. I love the growth potential at Kigavik. There's 10 known deposits there. Only 5 of them are in the resource base. So there's automatic room to grow there. And I think from an Urano point of view, while it's a very remote area to get to, they're relatively safe mining projects because they're generally open pittable. So that goes a long way from a risk point of view.
Okay. And then I guess one more JCU question here. How likely is Millennium to move forward in the short term?
Oh, if you think Millennium is going to happen next year or the year after, I think that's not fair. I see Millennium is how it fits into Cameco's portfolio. So you got to think like Cameco on this one. And number one for Cameco is getting MacArthur up and going. Number two is what do we do with Cigar Lake? And I think this is the only project they have to replace output at Cigar Lake. So Cigar Lake's down 2028, early 2029. They'll be exhausted. And that's what they're going to have to turn their attention maybe 2 or 3 years down the road to what do we do with Millennium.
Mm-hmm. Okay. A question here that came in about, now that you are involved with Wheeler and seeing what they're doing to move that project forward, is there anything technically that they're doing at Wheeler River that might be able to be applied to Hidden Bay?
I think I won't answer that quite directly because it's a difficult question for me to answer from a disclosure point of view. I think the best example of that is what they're doing with what they're taking. I take that technology and moving it off to what was formerly called the J zone. And yes, I think there are opportunities. I'm not so sure they fit at Hidden Bay. Hidden Bay is more of a basement hosted potential, which would be more amenable and probably more cost effective to do with conventional underground mining operations. But when you look out at any unconformity deposit in the Athabasca Basin, in our portfolio, you look at a Shea Creek, for example, and say, hey, is there a possibility there? Yeah, absolutely. So yes, I don't think it's going to be Hidden Bay. While it's not impossible to find the next classic unconformity Cigar Lake style at Hidden Bay, our focus really is on basement. So you'd be looking more of an Eagle Point type mining operation there. I would anticipate the discovery.
Great. Okay, thank you for that. And I guess just to wrap up, how much cash do you have on hand, both UX and JCU, and when might you need to come back to the market?
So we're sitting on just a little over $5 million in the bank for UX proper. That covers our G&A easily through to the end of next year. The question will be how much more we want to do in 2022 on our direct own projects. And so we could be looking at coming to the market in the next couple of months if we so desire. That decision has not yet been finalized or made yet. On the JCU front, we hold a similar amount of money co-owned, and that I think what I'm encouraged about is that while we said previously that there was enough money to cover all of 2022 exploration there's going to be a very small shortfall in the second or third quarter, or fourth, sorry, end of third quarter, early fourth quarter next year that we'll have to look at, because there's more work being done on JCU projects. So I think they're in pretty good shape either way.
Perfect. Perfect. Okay. Well, thank you very much, Roger. It's been great talking to you again. Thanks to everybody else for tuning in. Reminder here that Red Cloud Securities will be back Monday afternoon. Taylor is going to sit down with New Placer Dome. That's December 6th at 2 p.m. Eastern. Okay. Thank you very much, everyone. Have a good day.